Fear is back in the Bitcoin market. A whale just dumped $2.7 billion in BTC, and the market panicked. Is this price manipulation? Is it a breakdown in the bull market? Or just an essential step in the Bitcoin monetization process? And does the collapse of a 40-year bond bull market signal that over 99% of Bitcoin's adoption is still ahead? Today we dig into the flash crash, the Fed's pivot, and why this cycle may be the greatest monetization event in history. Welcome to No Second Best, the show where conviction meets reality and reality points straight to Bitcoin. I'm your host Hurley. Now let's get into it. On Friday morning, Fed Chair Jerome Powell struck a dovish tone at the Jackson Hole meeting, signaling the Fed is preparing to soften policy, which increases the chances of a September interest rate cut substantially. And Bitcoin responded immediately, surging up over $117,000. But less than 72 hours later, Monday morning opened with chaos. A flash crash that took Bitcoin under $110,000 in minutes. Over 200 million in long positions were liquidated, the biggest washout since December 2024. This dip ended up being a structural clearing of leverage, bigger even than the tariff-driven crash back in April, which sent Bitcoin down around 75K. Now it's easy to panic when you see red candles like this, but you always have to remind yourself to zoom out. Each of these events wipes out excess leverage and resets the market for healthier moves upward. We've seen this story repeat over and over. Think back to early 2024 when Bitcoin crashed down to 40,000, only to rocket up to 70,000 in a matter of months. This chart shows that the setup does look similar. But there's another layer to this story. Monday's crash was sparked by a whale unloading 24,000 Bitcoin worth $2.7 billion. That single sale sent Bitcoin down $4,000 almost instantly. And here's the crazier part. That whale still holds 152,874 Bitcoin, worth over $17 billion. And as you may know, this isn't the first time this cycle we've seen whales unloading at scale. Just last month, a whale sold off nearly 30,000 coins in one shot, triggering a sharp sell-off at the time. In an era of increasing institutionalization of Bitcoin, the cries of price manipulation and paper Bitcoin have been at an all-time high. But I really love what Vijay Boyapati had to say about this most recent whale dump. Vijay says, no paper BTC conspiracies are required. The price has stalled because a number of whales have hit their magic number and are unloading. This is healthy. Their supply is finite, and their selling is required for the full monetization of Bitcoin. Massive blocks of supply with enormous purchasing power are being distributed into the population. This cycle is one of the greatest monetization events in history. That's the key here. What looks like dumping is actually distribution. OG whales who bought at $10 are finally handing over coins to a new generation of holders. Willy Woo shared this chart which visualizes this redistribution. Whales who peaked their holdings back in 2011 have been continuing to exit with prices over 100K. And as Willy points out, it takes 110,000 of new capital to absorb each Bitcoin they sell. This is Bitcoin's monetization machine at work. And here's where it gets even more interesting, because the Fed is softening. Powell may not have cut yet, but the pivot has begun. Let's roll a clip from Matt Cole on today's episode of The Hurdle Rate.
I guess I just come back to my first principle on this is that we're never going to stop devaluing the dollar. We're never going to stop printing money. And so if we lowered interest rates, does that help? Yeah, you're just kind of playing this game of how low can you put interest rates before you lose control of the back end without the Fed having to buy? Because if you lower it too much, then the back end actually goes up because inflation expectations go up. But ultimately, what the Fed, I just don't think can possibly ever put into their mandate is the thing that they should be looking at, which is asset price inflation, because asset price inflation is too fundamentally tied to U.S. Treasuries and a functioning U.S. Treasury market, which means you need to keep that liquid and flowing. And because of the debt issuance, you can't I don't see how they don't just let that run absent fiscal conservatism, which we know is bipartisan, not in style. And so it just kind of comes back to this, macro thesis, this one big idea that they're never going to stop devaluing the money. And if they aren't, then you can put on these perpetual trades, which is obviously what Bitcoin treasury companies are looking to do, with these perpetual, perpetual equity instruments. And I don't see how you stop that outside of stop spending money. And so, would it be on the margin helpful for them to lower rates? Yes. Do I think they should? given everything we said, yes, but this is all, this isn't fixing in any way the fundamental problem of the debt crisis of this country. I think, from my perspective, as far as like the market pricing, the Fed made comments, they haven't made an action yet. And so there's still risk of whether action will happen, whether it won't happen. And I think you just have some seasonal, changes in like, short-term markets that, leverage can take place and wipe people out. And I think if you just actually think through what happened, it is bullish, it is dovish. And this kind of gets into, the market can stay irrational longer than you can stay solvent. I mean, this is, less than a week post change, and, Bitcoin is down a bit, like basically it broke out in July above 108. And right now it's retesting that. And 108 was a high from December. Like this is just normal market stuff at this point. Like, if the market, Bitcoin's a volatile asset, like the market sold off substantially more. And if waits, maybe we'll have a conversation of if something is actually broken. But right now, this is nothing more to me than a little pullback. And I think the pullback, could have a little room to say to go down, and I still wouldn't, change my view of that. And I'm just hoping it stays down here until we buy some Bitcoin.
Well, we're currently back to the July 7 levels here, so it's drawn back. It's around 109,250 right now. So we'll see. It might be doing you a favor here, Matt.
Imagine saying in 2022 that there's a pullback in the market. Bitcoin's only at $109,000.
Yeah, I know. It sounds crazy to even say, but it is where we are in the Bitcoin space.
The Fed can't stop devaluing the dollar. Every lever they pull, whether it's cutting rates, buying treasuries, or monetizing new debt, it only pushes the problem down the road. And the only thing the Fed can't ever acknowledge is asset price inflation. Why? Because the US Treasury market depends on rising asset values to stay liquid. If that stops, the system locks up. That's why lower rates or higher rates are just short-term noise. The deeper truth is that the United States is locked into perpetual money printing. It's built into the fabric of the system itself. And that's exactly the environment Bitcoin was engineered to take advantage of. And it's important to remember this crucial point. Every other asset on Earth, from gold to real estate to stocks, has a supply-response function. If the price goes up, new supply comes online. Miners dig up more gold, developers build more houses, companies issue more stock. Bitcoin is the only asset in the world where that can't happen. No matter how high the price goes, the supply schedule is fixed at 21 million. There is no dilution. There is no new supply that comes in to meet demand. That means every wave of new capital that enters Bitcoin doesn't just raise the price temporarily. It forces a permanent repricing of the entire network. That's why these pullbacks, as painful as they feel in the short term, are just small tremors on the way to something much bigger. And if you still think Bitcoin is already priced in, think again. Let's take a look at this clip from Preston Pish on what Bitcoin did.
So from like the 1980s until 2020, if you were a fixed income investor, it always went up. It was literally in a bull market for 40 years straight. And so when a person's looking at MicroStrategy and they're saying, okay, so he's like securitizing Bitcoin, he's issuing fixed income, that's not going to last forever. And my argument is when you have a bull market in something for 40 years and it's starting to unwind itself, you have tons of potential energy that's been stuffed into this fixed income market that's unwinding. That in and of itself is the fuel that's allowing Michael to do what he's doing with strategy to funnel all this Bitcoin onto the balance sheet, is because he's servicing that fixed income space as it's unwinding, which in my opinion has a decade. I literally was having dinner with Adam Back last night, and as he's starting a Bitcoin treasury company.
Yep.
Okay. And we were sitting there literally laughing our face off because we're like, nobody understands that this fixed income market is unwinding itself. And I was like, Adam, how big is that unwind? And he just started laughing and he's like looking up and it's hundreds of trillions of dollars that's unwinding itself. And Danny, if we went and asked 100 people off the street, do they understand this third piece that I'm talking about, which is the unwinding of the fixed income market? How many of them understand that?
It's probably zero.
Zero.
This is the piece that almost no one in traditional finance sees. From 1980 to 2020, bond yields went down and prices went up, and a 40-year bull market in fixed income was the result. And that trend didn't just shape Wall Street. It shaped the world we live in today. Mortgages got cheaper, retirement accounts were built on safe government bonds, Real estate values soared because credit was easy and interest rates kept falling. Everyone from giant pension funds to ordinary families buying their first home built their assumptions on the idea that borrowing would always get cheaper and bonds would always be a safe bet. But that era is now over. The bond bull has flipped. When interest rates rise, the price of existing bonds collapses, and trillions of dollars of capital sitting in the space are suddenly forced to move. Just think about the scale here. The global fixed income market is worth hundreds of trillions of dollars. Even a small rotation out of collapsing bonds into an alternative like Bitcoin would completely dwarf today's flows. That's what Pristine calls potential energy. Capital trapped in a system that no longer works, looking for a new home. And here's why that's bullish for Bitcoin. Bitcoin is the only pristine collateral left. It's liquid, it's global, it's bearer, and it doesn't depend on any government's promise to pay. When trillions start searching for safety, Bitcoin doesn't need to capture all of it. A few percentage points of this unwind would be enough to send Bitcoin multiples higher from here. So the next time your TradFi friend asks what the next narrative for Bitcoin is, tell them it's all the capital in the world. VJ is right. This cycle is one of the greatest monetization events in history. We are literally watching capital rotate from one broken system into the only incorruptible monetary network humanity has ever seen. And right now, what do we see in the Bitcoin market? We see sentiment flashing fear. The last time Bitcoin hit fear was June 22nd. The price proceeded to pump 19% in the following month. Volatility, meanwhile, continues compressing year after year. Take a look at this cool visual showing just how much Bitcoin's volatility has compressed since its inception in 2010. That's the slow grind towards maturity, which means these flash crashes have always been and continue to be opportunities, not existential threats. So what does this all mean for you? It means the panic you're seeing today is the price of admission to the greatest wealth transfer in history. It means the whales unloading billions are simply redistributing supply into stronger hands. And it means the Fed's soft pivot is yet another reminder that fiat is dying, and that Bitcoin is being monetized, and that we're still early. So stay humble, keep stacking, and be patient. And if you want to make Bitcoin a serious part of your long-term strategy, Swan Private works with high net worth investors, institutions, and corporate treasuries to help build generational wealth. Visit swan.com/no-second-best to learn more and book a call with a member of the team today. And don't miss BTC in DC at the historic Kennedy Center September 30th to October 1st. This is more than just another conference. It's where builders, executives, and policymakers converge in one room to help shape the future of money. Get your tickets at btcindc.com before they sell out and use promo code SWAN for 10% off. And finally, a quick shout out to Mara, the world's largest publicly traded Bitcoin miner, for supporting this show and for helping make Bitcoin the world's most decentralized and secure monetary network. So what do you think? Are whale sell-offs a threat to Bitcoin, or the very thing fueling its monetization? Drop your thoughts in the comments below, and as always, like this video, share it with a fearful friend, and subscribe to help more people cut through the noise. Thanks for watching, and remember, there is no second best money.